Electrical. This is Mark. He's the owner. Yeah, pretty much. What I quite like is this, is Mark, the owner, also leases the premises to the business. So regardless of what's happening to share price, he's doing okay. But anyway, Mark's Electrical, they're an online retailer. Let's have a look at the Microcap League, see where they are in the Microcap League. And Mark's Electrical, maybe just try Mark's Gas as well. Hey, after Curry, hey, Mark's Gas. But MAR Mark's. There we go. Number 135, down 35 in the money, down to 135. They are growing highly scalable premium electrical retailer, which sells, delivers, installs, and recycles a wide range of household electrical products. So they are sort of, a smaller competitor to A World, that kind of thing. But the customer service is very good. And like I said, it's an owner-founder. So the name's above the door. And when you get companies like that, you tend to find the reputation is very good. And so I think they're on Trustpilot, they're rated very highly. But of course, it's not been easy. Cost of living crisis. I mean, you got a lot of people replacing stuff, of course, like, if your washing machine breaks down or something. But discretionary spend, all that stuff, it's, especially on finance. If you buy on finance, that's expensive now. So people tend not to go out and splash out. So anyway, let's look at the tail of the tape. Marks Electrical. Share price, 72 pence. Target price, £1. Upside, shy of 40. Market cap, 75. Enterprise value, 67. It's in the green. That means there's more cash than debt, which is nice to see. And no net asset value. Oh, that's a bit odd. It's minus 0.05, really. How does that work? So average daily volume, it's about 45 grand a day in shares traded over 30 days. That is average. The revenue, 114 million. You see in retail here, we're seeing online, we're seeing a theme with the last two companies, aren't we? Online retail is the margins aren't big. We know that. It's pile them high, sell them cheap. So they got operating profit of 480 grand, 7.8 million cash, no debt. It's always nice to see. Operating cash flow 1.6, free cash flow minus 280. Nice, well, I say nice. It's a little dividend yield of 1.33. So growth, not really there, not convincing. Value, again, it's questionable. Momentum is low there. Health is okay. Efficiency, no. Potential, no. Or questionable. So these are 31st of March 2024, 70% top line. Now, these rallied, okay? And I thought, people just looked at the top line here, haven't they? And sometimes that'll do it. In a bull market, if you're growing your top line, people don't look under the water a little bit, don't delve deeper. And if you look at the chart here, I thought, oh, that's real. Then I started typing the figures for the microcap league. No, look at that. It literally went up. What's it go up by? Well, it went up by, I'll look at this one. From yesterday's close, it went up 9% and then ended up 1.5%. So there's like, oh, jump in, it's recovering. Yeah, buy on the bell. Let's read the results properly. Sell. So I think that's what sort of happened. So if you look at it, everything else has gone down. The growth compared to last year, down, operating profit growth, everything. Now we got a price sales value, we got PE of 177. Price to book is minus there. EBITDA of 31. Health is fine. So we got no growth, questionable value, gross margins, like I say, they've improved a little bit, but operating margin has gone down from H1, 1.7 to 0.43. Return on capital employed, 3.2 from 12. So it's a little bit of struggle, and they're obviously, suffering from inflation, all that stuff as well. And so forecasts, let's go forward here. They're looking at top line 10%, and the margins are improving here a little bit. Well, it looks like they are. I think I had 1 year forecast, and I extrapolated out. So don't pay too much attention to this. And then on the microcap league, not a huge amount of points are given to potential. It's just a guide, pretty much. The big points are in growth and value and momentum. But anyway, I said, look at the chart. It's come down again. Another one that floated in the bull market when everything was bullish, money was cheap. And then All of a sudden, oh, it's amazing, isn't it? How many companies float when, well, it's very cyclical. People are saying now, oh, London stock market or AIM's in trouble because no companies are floating. Hang on, when you go back to the bull market, they do. Generally, go back to any bear market, very few companies list because the economy's hard. People have lost money in the market. They don't want to risk any more money. They don't want to invest. Full stop. When oddly, that's where you should be investing at the bottom of the market. Everyone invests at the top of the market. That's why there's many IPOs because everyone thinks the market's going higher. Everyone thinks the markets will not go lower. That's the same thing with the bear market. The markets are low. Everyone thinks it's never going up. It's only going to go down. Tends to be opposite. So anyway, they've come back down to earth with a bump. I had a big gap up here, but still not above 200 a day. Some big gaps here. Yeah, I think it's going to take a little bit of a while for inflation to wash through and all that stuff, and for interest rates to come down, people start spending more on white goods and all that stuff. But anyway, listen, I don't want to sway your judgment on this, ladies and gentlemen. Uh, let's go to the watch list jury, the esteemed watch list jury. Mark's Electrical, ladies and gentlemen. Watch list or ignore. Let's have a look. Mark says, I like the name, but not the market. So not for me. Gareth, Mark, I know, too low on margins, but I think it's a solid business. Yeah, I think it will get better. I can't see, it's not, not convinced by it. So Chris, good idea looking at the 200 and 50 averages, waiting for the Golden Cross. Thanks, Chris. What's your thoughts on Mark's Electrical? Ed, they floated some crap in 21, but Mark actually seems like a quality business worth keeping an eye on. Could be sparky. Yeah. No, the business is very good, and I think where they win out is on good customer service because, like I said, it's founder, owner, run, and it's all about reputation there. And I feel people like that have a passion for the business, but they are fighting, a force now they can't control. Like I said, lack of consumer demand due to, the cost of living crisis. When that unwinds, I think this should be a very good recovery play, but it may take a while, I think. Mick, not for me, looks too difficult to exit if a stop loss kicks in. Yeah, it's quite volatile. And yeah. The other Rob says the other marks, an S, is a better buy. Having said that, it was a better buy. I mean, it's done very well, isn't it? Let's look at the share price of. I wonder if he fell out with his mate Spencer. MKS. Oh, why is it doing that? MKS. Cracking recovery here. Look at that. Look at that. Look at that bump in that. A good recovery from 88 pence to 254. Came back down to 91 pence. Sometimes bounces can happen massively at that. Come back down. But you've got to make sure then you're locking in profit. If you do get on a recovery play, it turns out to be a long bounce. Make sure you don't, again, this is someone who asked that question about when you take a profit. Don't limit that upside. Just limit the downside. Like I said, if you go, for example, let's say you bought when Marks and Spencer's crossed the 200-day moving average, okay, and then it went 20% at what is that? So at 113 you bought, at 142, basically a risk-free trade. If you put your stop loss at where you bought there, risk-free trade, okay, you could have averaged up a little bit there, and then you could have locked in another bit of profit. When it went 40%, 40%, then you could have raised your stop loss to 20% profit, okay? And then it'll come back down. What do you take out? It may have taken it out, but you made a profit, you made a loss, and then you may have gone back up. So I'm going to buy that again. Cross the 200-day, cross again there, look. Look at that. Came back down, cross again. So cross back up. Oh, I'm going to go. So if you just play the 200-day movement, let's get this off there. Hang on. Play the 200-day moving average game. Cross, right? Lock in the profit on the way up. Break that down. Cross up again. Lock in the profit on the way up. Okay, but again, there's no real volatility up here, and you've done well if you've locked in the profit subsequently, but don't get too keen with it, with the stop losses, because it may have taken you out there, but it doesn't matter because it rallied a bit higher. And then it came all the way back down to 88 pence. That's phenomenal, isn't it? That bounce. But now from 88 pence to 313. Anyway, listen, we're off topic here, and there's Mark's Electric we're talking about. Okay, so Mark's is maybe a thumbs down.